Welcome, I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and today we have a special guest with us, Pam Morton from Benefits from Design, who's going to talk with us about Medicare planning. But we usually talk about the markets, investing, and planning, and so we thought we'd incorporate Medicare planning because that's a hot topic coming up. But before we get into that, I just want to give an update. Usually we kind of look at what's happened over the last week. And the markets, as of yesterday's close, so today is October 10th. As of yesterday, October 9th, the markets were up from last week about 1% on the Dow Jones and about 1.5% on the S&P 500. So as of yesterday's close, the S&P was up over 21% year to date. So markets are still positive for the year. I'd be happy if it stays where it's at for the rest of the year between now and the end of the year, but we'll see what happens. And recently there's been some information about inflation. It looks like inflation numbers came in a little lower than August, but in September the inflation's at 2.4% versus 2.5% in August. And so I did a little digging to see, okay, where were we at, kind of what's the average for the year? The average year to date for inflation, we're looking at about 3%. Whereas the average for last year in 2023 was a little over 4%, and the average in 2022 was 8%. So we're starting to see a little bit of movement, and obviously it's going to take time to get down to the 2% that the Fed's looking for, but there's still indications and talks that potentially the Fed's going to cut rates again, at least 25 basis points at the next meeting. But we'll see what happens between now and then, and that's going to be in November.
And it's interesting, too, the Fed is cutting rates and we're not in a recession. That's kind of unusual. And I think that's one of the reasons why the market is holding up. We're not, the overall economy is okay, as opposed to us, being horrible. And that's usually when rates come down. So most everything I'm reading and seeing still signifies that the stock market should do okay. Bond market should do well if rates are coming down. That's positive for bonds as far as your return. So it's a little bit of an unusual period. And then you've got the election coming up, which a lot of times freezes some people, but it doesn't seem to have done that. Yet this is supposed to be a very, very close election. So we'll see what happens. It's an interesting time.
I know,
right
like
now.
I said, I'd be happy if we just stay where we're at between now and the end of the year, but we'll see. That might be wishful thinking.
You never know.
Okay, so let's talk a little bit about Medicare planning. Perhaps, Pam, if you want to share, kind of Medicare, maybe some new things that you're seeing out there right now that's on the horizon. We do have some clients that are already kind of have Medicare, or currently we have some that are a little younger or some that are phasing in, but most of our clients are already retired and have Medicare in place.
Okay, well, I think first I'll talk about people who have Medicare now, and then we'll talk about people who are still working and have Medicare. So this year there are a lot of changes with Medicare, and mostly they have to do as a result of the Inflation Reduction Act in 2022. And the biggest thing that's happening this year is that there's going to be a cap put on people's prescription drug usage. So since 2006, we've had a standardized benefit, and now previously in this year you might have gone up to as much as spent $8,000 out of pocket, and so reducing that to $2,000 is really going to be a significant change. And the insurance companies are putting some things in place to make sure that there's a stabilization of rates and benefits because of the fact that it is such a big change, but this is all really good news for the consumer. And so if you have currently Medicare, you have Medicare Parts A, B, and D, what you want to look at in your Medicare product planning for this upcoming year is, have you received your mailing yet from the insurance company that you get your benefits from? The annual mailing is called the Annual Notice of Change. And that will tell you about the things that are going up in terms of price, changes in benefits, if there's medication changes, if anything really that's significant. If you haven't received that yet, this is your call to your insurance company in the next couple of days to let them know you didn't get it and you need to know what's changing. Starting to see get a lot of calls from clients, and the main message is that it's not a significant increase in cost, but a lot of people are having their Medicare Part B costs go up. And so this would be a good time, especially if you haven't looked at it in a few years, to see if there's a better product out there available for you this year. So that's what I'd start with.
Okay. So it's interesting. I read an article that an average 65-year-old that's retiring is expected to spend about $295,000 in lifetime healthcare costs. So this is a big part of when you look at financial and retirement planning. This is an expense that is factored in. Obviously, any changes impacts the overall plan, but it is definitely something that you want to look and review. And we also have some clients that are about to turn 65, so maybe you can share, when's a good time to start looking at something like this.
The best time to start looking at Medicare products is about 3 months before your 65th birthday, if you're going to be actually retired at that point. If you're still working, then you want to make sure that you get a letter of credible coverage from the insurance company that's currently providing your benefits, because if you retire and you did not have benefits that were the same or better as the standard Medicare benefits, then you'll actually have to pay a penalty for that. So that could be mostly with Medicare Part D prescription drugs, but you could also be impacted by Medicare Part B as well, because COBRA coverage does not count as credible coverage. So make sure you get those letters. For people who already have Medicare, the best thing to do right now, I already forgot your question.
It's okay.
Thank goodness there's editing.
You're fine. And so one of the things that comes up with financial planning when we look at working with some of our clients, occasionally we look at partial Roth conversions and also when to take Social Security. And so when we look at that, then we also have to factor in, what are the income limits, because depending on that, there are certain amounts that you have to pay out in premiums. And so that's something, obviously, turning it back over to Rachel on the tax part of it, those are things that we have to look at, is because there's the IRMA and making sure, okay, if you are making any changes from a planning perspective, does that impact your Medicare planning and the costs that are associated with that?
So what you're referring to is the surcharge if your income spikes, and therefore you'll pay an additional amount for your Medicare premiums. And I deal with this a lot with clients, and there are certain exceptions to the rule where you can write a letter in to the government and ask them to waive that penalty or that additional premium. And I actually got it granted this last year, so it was actually pretty fantastic. So I have a great letter template that I came up with. The client was profusely thanking me this year because they had a death, and then they had to sell a house prematurely, and then there was income and so on. So if you do have that situation where you do have a spike in your income and it does affect your Medicare premiums, there are ways out of that that we've been successful with. But when I think of taxes and Medicare, I think of itemized deductions. And so a lot of people ask me, can I write off my medical expenses? And there are ways to do so. I'll keep it short, but you do have to itemize your deductions, and it has to exceed 7.5% of your income.
Just another comment along those lines is that when people retire, a lot of times their income is reduced in the subsequent years. And so there's a form that Medicare has you can fill out, and you can ask for them to review your income prior to the 2-year look back that they normally do.
Correct. That's exactly.
So the other thing that ties in with Medicare is the healthcare premiums, and it seems that those premiums keep going up and up. And so it just seems that the cost of insurance, as we're looking at budgeting and expenses, that it appears every year that premium is going up, not only as an employer, but also for those that are receiving benefits and premiums.
Well, I have a question for you. I mean, for those people who are on Medicare and they see that the cost of healthcare just keeps going up and up, there is some talk that Medicare just won't be enough. Do you hear that, and is that true?
I think it's just like anything else that is an entitlement. We'll have to see if they're able to keep that going over the years. And I think maybe along those lines, though, the advice I usually give most of my clients is that they should choose a Medicare supplement and plus a Medicare Part D prescription drug plan. But the cost of the supplements as you get older go up quite a bit. And now the insurance companies have a Medicare Advantage plan that's a PPO plan, and they're usually way less expensive. And several of the companies now are offering national networks. And so you can, where that was a deterrent previously for joining a Medicare Advantage plan, now more people I think will be encouraged to join those because that's going to drop the cost of their health insurance for Medicare.
Okay, but wasn't there some issue with the Advantage plans here recently that some of the states or some of the insurance companies, I don't know how it works exactly, but they weren't taking that?
What happened was that there was a loss of a large medical group here in San Diego with the Scripps physicians, and they weren't taking it any longer. And so there were approximately 20,000 people in San Diego County that were impacted by that.
So is that an anomaly, or is that something that you think will continue to happen?
It's something that could happen again simply because those contracts are negotiated every 3 to 5 years. And we haven't seen that in a long time because there's been plenty of funding from Medicare for Medicare Advantage. Funding was decreased a little bit this year, and then also the decrease in their revenue that was coming from different parts of the system for the Medicare Part D as well. So we are on a little bit of a decline in funding overall, and so I think we'll have to wait until next year to see what the real impact will be, and if they'll continue to reduce the number of plans that are offered, and the availability of certain provider networks.
What would your advice be to those affected individuals? I know it's really frustrating when you can't see your doctor or your specialists, and 120,000 individuals, you say were
20,000.
20,000. I mean, it's still so many people. What would your advice be to them given the situation?
Well, most of them needed to either change their plan or to purchase a Medicare supplement instead of a Medicare Advantage plan. So if they can afford it, I'd say get a Medicare supplement plan. And if they can't, then look for other providers for primary care, because they could possibly still see specialists that were within the network that they were used to.
And is now open enrollment?
The annual election period starts October 15th and goes to December 7th.
So you're going to be really busy.
I am.
That's a good thing.
It is. I love it.
Well, we think part of financial planning does incorporate Medicare planning, and we rely on specialists like yourself because there's a lot of detail that goes into this, and a lot of changes every year. It's like year to year, especially this year. And so, Pam, we do appreciate you being a resource for us. Once again, it's Pam Morton by Benefits by Design. And Pam is actually a recent new client of ours as well, so thank you for joining us in our firm. And if there's anything else you want to share before we wrap up?
Well, just that you can, a free resource for you and a reliable resource is just to go to Medicare.gov, and you can put in all your prescription drugs and the doctors that you see, and then you'll have an opportunity to look and see what plans might work well for you. If it seems like it's an easy answer, that's great. Otherwise, I would suggest that you get in touch with a broker, someone like myself.
You know, I think the best thing, don't get sick.
There you go.
All right, well, that kind of wraps it up for this week. We'll see you again next week. Thanks a lot.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.